Well, we're finding out more about the new tax-free First Home Savings Account that was introduced by the federal government last fall. FirstOntario Credit Union investment specialist Yvonne Delry joins us now with more. She is registered with Credential Asset Management to provide investment advice. So a lot of people don't know a lot about this account.
No, well, because it's new. It was just introduced April of 2023. So first home purchases is a very hot topic. So this is an exciting new government program introduced to add to its existing lineup.
Okay.
So there's a lot of great features and benefits to this account that we're going to break down and talk about today. One of the biggest ones is the tax savings that can happen with the First Home Savings Account. So the contributions are tax deductible, so they reduce your taxable income, so you get a tax break.
Okay, those are in the years that you're making a contribution to it?
Well, so yes, but we'll talk about, because you can actually push forward the contribution into, so you don't have to report it the year that you make the contribution. You can push it forward into years where you could be in higher marginal tax rates, so you get a bigger tax break. While the money is invested, the returns are earned tax-free, so you don't have to report that on your income tax. But the nice thing also is that when you remove it and you purchase a qualifying home and you're a first-time home buyer, you do not need to report what you withdraw on your income tax. So there's a couple of really neat or great tax benefits to it.
Okay, it's starting out at a fairly small amount because, and if we remember, TFSA started out at a very small limit as well. But you say it's kind of like the government is just kind of like testing things out with how things go.
Well, I think that they're, this is what they're starting off at. So the contribution limits are $8,000 annual contribution per year to a lifetime maximum of $40,000. When you open up, so once you have opened up the First Home Savings Account, you can carry forward unused contribution room to $16,000 per year. To make the contributions, you can obviously make them right from your savings account or checking account.
Right.
But you can also do a direct transfer from your RRSP into the First Home Savings Account. It doesn't give you back the RSP contribution room. You can't use it as another tax deduction because you already got the tax deduction when you put it in the RSP, but you can do a direct transfer. Don't make an over contribution or try to stay within your limits, because there's a 1% charge for every month that you are over the contribution until it is eliminated. So on your latest notice of assessment or a 1028 will give you all the calculations. Also, who can open up the First Home Savings Account?
You have to be 18 and you have to do it for yourself. Like a parent can't open up.
You have to, it is opened up under your own name. Minimum age is 18, maximum age is 71 for when you open it up. You also have to be considered a first-time home buyer, which means that you could not have lived in a primary residence that you owned, jointly owned, your spouse owned, or jointly owned in the year it was opened or the previous 4 years.
Okay. Can two people take their own savings accounts and buy one home together?
Yes.
You can?
Yes.
Okay.
Yes, because you can have, each of you can have and be putting it towards the down payment of your first home. Now, if you don't buy your first home or you don't use it for the down payment of a home, so there has to be some planning in this, because...
Okay, and I'm thinking, so they're telling us that we've run out of time. I'm thinking that maybe we carry on this conversation the next time you're in, because there's so many more questions and so many like limits and things that you need to know before you open it. But it is a good idea.
Absolutely.
Yeah.
Absolutely.
Okay. Thanks very much, Yvonne. We'll get your info and all your links up on our website, chch.com/morninglive.
Perfect.